Good morning. This is Larry McMillan with a stock market update on Monday, January 27th. So wait a little bit longer to make the update today because the market's down a lot on China's new AI program. I'm not sure that's really all that exciting, but the market certainly is reacting to it. We have an FOMC meeting this week and a couple of other things that are making the market nervous, including earnings reports from a lot of big cap stocks. So as a result, the S&P is down sharply this morning. And even though we broke out to a new high last week, an all-time high, it's possible that was a false breakout and we're just back in the old trading range again. There are a bunch of gaps on the chart now. There's an upside gap, and there were three downside gaps. One of those has been filled. There's an island reversal, bearish formation on the chart, just all kinds of crazy things referring to gaps. The main support, the one that really held before this last rally started, is back down at 58.30 to 58.70. So that's certainly solid support. And for right now, we have to say there's resistance at 6,100, despite the fact that a new high was made last week. Equity-only put-call ratios remain on sell signals. To the naked eye, they look like they're rolling over, but the computer analysis programs that we use to analyze those charts continue to say that they're on sell signals. On the other side of the coin, though, breadth has been positive, and so the breadth oscillators were on buy signals. That may change after today. And then also new highs versus new lows. That's going to remain on a buy signal no matter what, because it takes 2 days for that to change. So that's still on a buy signal. That brings us to VIX. VIX is up sharply today, as you might expect with the market declining. And so it's back in spiking mode, which will eventually lead to a short-term buy signal. But it's also a little bit nerve-wracking because if VIX starts trending higher, and it has now reacted to sharp downside moves in the market pretty strongly a few times in recent months. All of that adds up to the fact that we might be in a much higher volatility space than we thought we were before, or than we were before. And so that could lead to some problems further on down the road. But for right now, there are actually no VIX signals in place. They will be setting up as the week progresses this week. Meanwhile, we do come to a positive seasonal at the end of January, so that could still lift the market strongly. That really doesn't care anything about this fundamental news of today, but typically there's heavy buying at the end of January as fund managers put money back to work. And we would expect to see that again beginning after Wednesday's close and continuing into early February. Meanwhile, if you subscribe to our newsletters, you can get daily details on all of these systems and facts. And I invite you to visit our website and take a look at, at those subscriptions. Meanwhile, have a great week trading.